On Monday, European Central Bank President Mario Draghi is due to testify before the European Parliament's Economic Committee in Brussels. Now, the ECB chief will give his perspective on recent economic and financial developments, potential impacts of Brexit on Eurozone activity, and retrace the monetary policy outlook. The divergence between the hawkish Fed and the dovish ECB hint at further depreciation in the euro-dollar. The first target is 1.0460, last seen in March 2015, before considering talks of a potential setback towards parity. Now that the Fed's policy has become clear, it is the ECB's turn to share its plan, and expectations are rather dovish. The net short positions in euro have softened over the past 2 weeks, lending the potential for a renewed short build. We maintain our bearish euro view in the midterm and remain sellers on the potential upside attempts. Across the channel, the Bank of England will release the bank stress test results and reveal the latest financial stability report to assess risks to financial stability. Now, investors will be watching the Bank of England's latest assessment of monetary policy after the autumn statement hinted at larger spending due to Brexit. The Bank of England is expected to remain as loose as possible, with an unusual tolerance regarding inflation due to the Brexit risks. Now, a rate cut in the UK is unlikely, given that the bank rate is already at historical lows and the BOE will likely refrain from approaching the zero level. However, there are alternative ways of intervening in the market, such as asset purchases, which the BOE might be keen on using. Hence, the pound is expected to remain under pressure against the US dollar. The midterm bias remains on the downside, on the back of a hawkish Fed and a dovish BOE. A drawback towards the 120 level is possible by the end of 2016. Now, the outlook for the pound against the euro, however, is less straightforward. At 0.8425, the pound would have recovered half of the post-Brexit losses, and the pound's appreciation could continue towards 0.8335, the 200-day moving average. That's before 0.8227, the major 61.8% retracement on the post-Brexit rise in euro-pound. Now, OPEC countries will meet in Vienna on November the 30th and are expected to come to an agreement to cut oil production. Now, cheap oil has taken its toll on all members' finances, and each member knows that it's time for action. While an OPEC output deal is likely, it's the details of the deal that will make the difference to investors' appetite. Either the barrel will recover above $50 for a sustainable rise towards $55 by the end of the year, or the price will resume its slide for a renewed attempt towards the $45 level, matching the 200-day moving average. On Thursday, the final manufacturing PMI figures will hit the global markets. Japan, China, the Eurozone, the UK, the US and Canada will all release their latest purchasing manager indices. The PMI figures are expected to trigger talks on the health of the global recovery. As the Chinese manufacturing data could impact activity in the commodity markets, the convergence-divergence within the Eurozone economies and the strength of the UK's manufacturers post the Brexit should be the main highlights of the data stream. Finally, Friday's US jobs data, while important, is expected to be one of the least relevant jobs reports of 2016, simply because the Federal Reserve is 100% expected to hike interest rates at December's meeting. In this context, even a surprisingly weak jobs report is not expected to keep the Fed from hiking rates in December. Now, that's a quick wrap-up on some of the major macro events traders should watch out for next week. Check out our analysis page on our website and don't forget to connect with us on social media. Have a great weekend. Goodbye.